Hello, my name is Ben Brown. I'm with the College of Food, Agriculture, and Environmental Sciences at The Ohio State University, and this is my market outlook for the week of April 10, 2020. I'd first like to start off with talking about the United States Department of Ag supply and demand estimates that were released on Thursday, April 9th. These estimates weren't that surprising. In fact, the directions were almost all exactly what we thought they would be, with maybe a couple of exceptions. We were just watching the magnitudes to see how USDA would treat some of this black swan event as the COVID-19 is working its way through economies across the world. When we look at the United States and we think about our carryout in terms of corn, soybeans, and wheat, all three commodities were up from what we saw in March. Not totally surprising, as we have seen some significant demand destruction of all three commodities. It was above what the trades were expecting as traders had submitted their estimates and been summarized. And so definitely not a very bullish report by any means. There were some support for soybeans on the world side. When we think about carryout globally for soybeans was down below what we anticipated, largely due to a reduction of 3.5 million metric tons from South America, 2 million metric tons from Argentina, and 1.5 million metric tons from Brazil. And so as we see their second crop, corn crop, coming into the picture as well, we start to worry about the drought. The last 40 days in South America has been extremely dry for this time period, and as their second crop enters pollination stage in the next couple of days or weeks, we will see just how resilient that crop is. Brazilian soils are unforgiving, and any form of prolonged dryness down there will put significant harm to their corn crop and could open up some possibilities for corn and soybeans, but especially corn here in the United States. So just wanted to recap and show you that nothing terribly surprising. It was just the magnitudes we were watching out for, and the one that was probably the most anticipated and anxious for was ethanol, corn used for ethanol production. As we've heard in the media and as we've noted here as well, that somewhere in the neighborhood of 3.5 to 4 billion gallons of annualized ethanol production has come off the market as ethanol plants have shut down due to low profitability, negative profitability in terms of what we're estimating here from an Eastern Corn Belt standpoint. When you look at the returns here, mostly negative returns all the way from June of 2018. That's continued to exist. We assume that's above variable cost, and we think about in terms of you'll continue to produce as long as you're meeting your variable costs. And so we don't know exactly where that cutoff point is, or at least I don't. But we do figure at least now it's somewhere around between 20 and 35 cents, right? When we look at these and we think about this, because now we're at a 35-cent loss. Ethanol prices have fallen as we no longer drive as much due to a lot of these stay-at-home orders, both here in the United States and across the globe. But even low gas prices are taking away the incentive for higher blends of ethanol into our gas stream as well. So what does that mean in terms of corn use going forward? Well, the last 2 weeks we've seen 840,000 barrels of ethanol produced a day. This week it was 670,000 barrels of ethanol produced during the day this last week. That's the lowest on record all the way back to January of 2010. We start looking at that and breaking those numbers down. We're talking about roughly 6 million bushels of corn a day that has been lost due to this when we think about where we were and now where we're at now. The question becomes, how long do we stay in this environment, and how quick do people get back to driving and consuming ethanol as we move forward? However, I don't want to end on a negative note. I want to point out some positives. Not only are we seeing increased feed and residual use, especially feed use due to low-quality corn from the 2019 crop. We'll have to wait another month to see if USDA is going to lower the 2019 corn crop estimates, especially in those northern plain states like South Dakota, Minnesota, and North Dakota. So not only are we seeing increased feed use, but we're seeing very strong corn exports, and that shouldn't be a surprise to anybody, given how the low price, some of these countries taking advantage of low U.S. corn price. But when you take into account a currency exchange and how strong the U.S. dollar is compared to some of our competitors, especially South America, Ukraine, the Russian ruble, it is probably surprising to see how strong our corn exports been given our competition for currencies globally. The last couple of weeks, 2 out of the last 3 weeks, over 70 million bushels of corn exported of new export sales for the week. We had one shipment of that high back in December of 2018. That was 78 million bushels of corn that week that went to Mexico. In the last couple of weeks here in the United States, we've seen more solid distribution between Japan, South Korea, Saudi Arabia, and Mexico. So a little bit more variety, just signaling how how much these countries are looking at the United States as a supplier of worldwide corn. And when we break that down even further, this graph here just shows how many days of supply we can go on the corn crop that we have on hand. Obviously, there isn't a shortfall of corn globally. We have lots of corn globally, and there's expected to be another strong crop here in the United States at 97 million acres, even though I think we will come back from that, maybe 94.5, 95 million acres of corn, which would be on the low end of that. So maybe a more an aggressive estimate in terms of where we could be. But we have been bringing our corn stocks globally down. But when you take out China and the United States, both of them big suppliers and both of them a lot of stocks on hand of corn. China doesn't export a lot of corn. The United States does. We're a big player. So when we take and look at everybody else minus us, we're at the tightest corn stocks globally since 2001, 2002. So if we have any type of shortfall due to a weather scenario or weather scare in South America with the Brazilian second crop corn, that opens up the potential for these corn surges in exports from the United States to continue. That would be very supportive. And if you heard my Outlook talk this year in January, I was talking about that end of February, beginning of March timeframe to export some corn. I think that got delayed about a month now. That would be what this is telling us, delayed a month due to the coronavirus, but we are seeing those stronger corn exports. Do I think those can continue? Yes. Do I think it would be very beneficial for South America to have a short crop? Yes, but I'd never wish that on anybody, but it would be very supportive of the United States corn export picture if that were to happen. And then lastly, I just want to say, please plan on joining us on Monday, April 13th, as we have another Farm Office Live and break down some of the impacts that we're seeing in the ag sector. This week we'll have another focus on the CARES Act, and as it relates to agriculture, and we hope you'll join us at 8 o'clock Monday night. Thank you, and hope to see you around the state of Ohio soon. Thanks.